This is a really confident consumer. What do you make of it?
Indeed, this is the second straight month of huge increases in sentiment for consumers, and they're just really on the upswing right now. They're feeling much better than they were last year, and it's very much being supported by the continued slowdown in inflation as well as continued strength in labor markets.
But you also saw inflation expectations move higher for the 1 year, and I feel like normally when that moves up, sentiment falls over. So why can both move higher and everything's okay?
The reason is that it only ticked up just a little bit. It only went from 3.3 to 3.4%. It was a very, very small change, and it's much lower than it was a year ago where it was over 5%. And the 5 to 10 year long run expectations have been sticking within 2.9 to 3.1% for 2 years now, and that continued this month.
Joanne, is there some degree with which consumers are getting better at understanding inflation and handling inflation? They're kind of living with it more now?
That's certainly part of the situation. They're not nearly as in shock as they were when the situation started a year and a half, 2 years ago. But the thing is that consumers were feeling a lot of anxiety and uncertainty over the trajectory in inflation. And consumers are feeling considerably more confident now that they have a better handle that inflation really is slowing down. The uncertainty over their expectations has come down considerably over the course of this year.
We've just seen global stocks have the best week and the best rally since November. How's the stock move at all playing into this?
It's playing into it a little bit, particularly for higher income consumers. For them, they are feeling stronger about their assets, and certainly higher income consumers are being supported by the strong performance in stock markets. For lower income consumers, they're not really being affected at all, and in fact, their sentiment went down a bit this month.
Interesting.
Joanna, we have seen oil prices perk up a bit. They perked up this week pretty significantly given some specific oil market dynamics. But how sensitive is what you see the consumer to oil prices? If we do indeed get a resurgence in the cost of energy, could that really shift the picture?
It depends on how sustained any increase and how much this increase in gas prices might be. If it lasts, and particularly if it's coupled with a turnaround and an increase in inflation again and other prices, it really could put a damper on consumer views. But if overall core inflation continues to slow down and cool down, a slight increase in gas prices probably is not going to turn the tide.
Hey, Joanne, can you go back to what you said about the lower income customers versus the higher and the divergence between the two? What's driving that?
I think very much it's the stock market. Generally, higher income consumers always have higher levels of sentiment than lower income consumers, but actually they converged last year with the turbulence in the stock market and inflation hitting everyone. Now the stock market is picking up again. People who hold risky assets are feeling more confident about that, and the historical divergence that we see it has come back.
Do you see a divergence then not just in sentiment but in inflation expectations then between the two different groups?
A little bit, but not really. I would say there's quite a bit of consensus that inflation has slowed down. That's something that we see across the board, across different types of goods, durables as well as goods in general. And lower income people are feeling the hit of inflation a little bit more, but they do believe that it's slowing down.
Joanne, also what we saw in last jobs report was that for minorities like African Americans and Latina employment started to roll. The employment rate started to tick higher. Are you seeing that uncertainty or the lack of jobs there transmitting into the survey?
We are seeing that higher income consumers, which is to some extent correlated with race, they feel more confident about labor markets. Lower wage workers are feeling less confident. I mean, they don't feel like the labor market is unraveling, but they do feel less confident about their incomes. They expect their real incomes to decline over the year ahead. So we do see a bit of that, but it's not a stark divergence.
I mean, Joanne, does this just say to you that if the Fed wanted to, they could continue to hike more without really cracking consumers?
At this point, actually, consumers are expecting interest rates to continue rising. They're not expecting interest rates to fall anytime soon. And I think that the fact that consumers feel confident about their incomes is probably a good sign, and a good sign for policymakers who are that consumers could withstand further rate increases for the time being. But of course, there are long policy lags, so it remains to be seen.
Joanne, what is, just going forward, what's the biggest question mark you think that consumers have? If they're kind of like making peace with higher interest rates, they're dealing with 7% in the 30-year mortgage, they're dealing with inflation expectations kind of hovering around 3%. What's their wild card now?
Their wild card at this point is whether or not their incomes can hold up and whether or not they can continue feeling confident about their jobs. Just a few months ago, we were starting to see some cracks in labor market expectations. Those have firmed up again, but I think that is the wild card. If labor market expectations unravel, it doesn't matter if consumers believe that inflation is coming down. They could really start feeling unconfident about the economy, unconfident about their personal circumstances.